Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Sleep Country Canada stock so we can determine if it's a buy or a sell. Sleep Country Canada is a mattress retailer with over 250 stores operating in British Columbia, Alberta, Saskatchewan, Manitoba, Ontario, Quebec, New Brunswick, Prince Edward Island, and Nova Scotia. The company is headquartered in Brampton, Ontario, Canada, and was founded in 1994. Let's get started with the model. This is a small cap company, 800 million market cap. They're trading at $24 a share, and they have 35 million shares outstanding. We're looking at the ticker that trades on the TSX, so all the numbers in this video are in Canadian dollars. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow grew 50% from 2019 to 2020. Then it's been pretty steady after that, hitting about 146 million in 2022. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's steadily growing each year. It doubles from 2019 to 2022. Revenue is the sales for the company, and that also grows steadily from 712 million to 929 million. Let's look at the capital structure, 413 million of equity and 413 million of debt. That is correct. They're not exactly the same number, but they're really close. So they're 50% equity, 50% debt. Their net debt is 335 million, so they have about 80 million of cash on their balance sheet. They have a WACC of 11.5%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 1.9 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $1.7 billion. We divide that by 35 million shares. And we get a calculated stock price of $50. They're trading at $24, so they're trading at a 53% discount. It's a really strong buy according to the model. Simply Wall Street values them at 36. They're saying it's 34% undervalued. 6 analysts priced this stock, and the average price target is 30. They say it's 27% undervalued. They pay a pretty good dividend. They've been raising it from 17 cents in 2017 up to 22 cents currently. It's a yield of 3.66%. The way you calculate the dividend yield, you take their last dividend, 22 cents, multiply it by 4, that's 88 cents. Take that number and divide by the stock price. And that is affordable. It's only 21% of their free cash flow, 27% of their net income. This is their stock price since they started trading in 2015. It looks like a roller coaster. It IPO'd around $15 a share. Then a year and a half later, it was over $40. Then it dropped to about $11 in the beginning of 2020. Then at the end of 2021, it broke through $40 again. It bottomed out at $20 a few months ago. But so far in 2023, it's been trading between $22 and $26. It does look like they cut their dividend in 2020, probably due to lower sales from COVID, but they brought it back pretty quickly. There are 53 companies in the same industry as Sleep Country, and they pay a generous dividend, a lot higher than the median average. Look at Best Buy, 4.8%. Advanced Auto, also 4.8%. They rank 31st in market cap at 800 million. I converted all the market caps to Canadian dollars. The average is 6 billion. They have amazing ratios. Price to book of 2.0, a lot better than the median average. An amazing PE ratio of 7.4. Look at that price to free cash flow, 5.6. So much better than the median average, and a price to sales of 0.9, which is a little worse than the median, but a lot better than the average. Since it's below 1, that means their revenue is above their market cap. So to summarize, I have them trading at a 53% discount. I rank their free cash flow as 5 out of 10, their revenue 6 out of 10, and their ratio is 10 out of 10. So let me know what you think. Give the video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.